If you can go back in time and pick 8 stocks to be invested in for the long term, which stocks would you pick? Let me know in the comment section down below. Now, I posted this question on the private Discord server and I got a list of 8 stocks that we're going to review today. Now, each of these stocks have performed really well, and one of those stocks has been the best performing stock in the stock market, and a few of them have been in the top 5. Now, in reality, if you were to pick 8 stocks today to invest in today for the future, some of those stocks will not perform well. It's just the reality of the situation. You're gonna get a few of them wrong. So the data that we see today, the numbers we see today, is if you got 8 stocks and they all performed well, which is very unlikely that you're gonna do so. Because hindsight is 20/20, and picking stocks now and looking at how they performed in the past, knowing which companies have been great, is going to skew the results. So we're at a portfolio visualizer right now, and we're going to back test this portfolio to see what our total returns would be. These are our parameters. We're going to go back in time as much as we can because some stocks will limit the amount of data we can go back. We are going to start off with an initial amount, say that you are going to do a lump sum investment of $10,000 to get started. Then we are going to contribute a fixed amount of $500 a month, which is $6,000 a year, which is less than what you can max out on your Roth IRA today. Now here are our 8 stocks, and we're going to invest in them equally. So 12.5% across the 8 stocks for portfolio number 1. The 8 stocks include Apple, great performer, probably the best stock in the stock market, Amazon, McDonald's, American Express, Valero, T-Mobile, Wells Fargo, and Southwest. It's a good group of stocks. It's diversified in many different sectors, and all of those stocks have been great performers. Now we're going to compare it to an investment just in the NASDAQ 100 or the QQQ, also known as the Qs. This is an ETF that gives you exposure to a lot of different stocks. As of now, these are the holdings in the QQQ. You're invested in Microsoft, Apple, Nvidia, Amazon, Meta, Tesla, Google, Broadcom, Pepsi, Costco, Adobe, Cisco, Netflix, AMD, Comcast, T-Mobile. The list goes on and on. If you look at the sector allocation for QQQ, you're invested in many different sectors. You're invested in technology, consumer discretionary, healthcare, industrials, telecommunications, consumer staples, utilities, energy, not classified, basic materials, and real estate as well. Now the QQQ is tech heavy. It's going to be growth heavy. It is going to favor companies that are innovative and growing at a great rate. Because of that, it is going to be a little bit more risky than investing in an ETF like SPY or VOO, which tracks the S&P 500. Now the results go back to 2008 because that is the most amount of data that we have for T-Mobile, which was started in 2007 or went public in May of 2007. So here's our performance summary, and there's a lot to take away from here. Our 8 stocks equally invested at 12.5% and continue to invest in them over the many years has a final balance of $665,000, which beats just investing in the Qs at $559,000. So obviously this is the better portfolio, but keep in mind this is cherry picking 8 stocks, acting like we know what's going to happen in the future. The compound annual growth rate is 31.11%. The standard deviation is 20.51%, and the best year is 48%, and the worst year is negative 34%. The max drawdown is negative 46.9%. If we look at just investing 100% in the Qs, our final balance is $559,000. Our standard deviation is lower, so this actually experienced less volatility at 19.35%. The best year is 54.66% or 68%, which is actually a better year compared to our 8 stock portfolio. Our worst year is worse than our 8 stock portfolio, coming in at negative 41%, and the max drawdown is essentially the same, both at negative 46%. Now, when we take a look at these results, what's the takeaway? Well, hindsight's 2020. If we were able to pick 8 stocks that we thought would have been great performers, we're only slightly outperforming the QQQ. So the takeaway for me personally is that when you're investing in the market, don't overcomplicate it. and just invest in index funds that are low fees and continue to invest over time. It's those contributions monthly that are going to increase your CAGR or your compound annual growth rate. Because when the stock market is falling and you add to it and add to your investments, you're increasing your positions so that when it ultimately recovers, you are going to see more growth. The most important things when it comes to investing is finding those low fee index funds, continue to invest in them, and allow time to work for you. So the sooner you can start investing in the markets, the better. And if you use a vehicle like a Roth IRA and you max it out, when you go to retirement, you're not going to have to pay taxes on those gains, which is just phenomenal and why I think everyone should be utilizing a Roth IRA. This just goes to show how efficient the markets can be and how difficult it can be to outperform the overall market for the long term. And that's why smart investors like Warren Buffett has stated in his will after he passes away, he wants his money just to be invested in the S&P 500, 90% of his cash in the S&P 500 in a low fee index, and then 10% in short-term treasuries. He believes that the returns are going to be better than those provided by financial analysts and by professionals in the industries that charge high fees, because those fees are going to eat into the cost. And as you can see, even if they pick great investments, the returns might only slightly be higher than the overall market. And in some cases, they underperform because some of their investments, even though they've done their due diligence and they are attractive companies, things happen and sometimes investments don't work out, and that eats into your returns. But let me know in the comments down below what 8 stocks you would have invested in and if you invest in funds or individual stocks for the long term. Outside of that, I thank you so much for your time. Hit that subscribe button if you haven't already. Smash that notification bell so YouTube will notify you when I make new videos, and hit that like button. I'll catch you on the next video. This is We Are Investing, and I'm out. See ya.